Today, Bitcoin trades like a tech stock, but its monetary properties that are outlined in the white paper that happens to be colored black behind me make it so that Bitcoin is the apex hedge against monetary debasement. In good times and bad, that's the thing you want to be buying. But currently, the way Bitcoin trades, in bad times, people sell Bitcoin. Over time, that's not going to be the case anymore, right? In good times, people buy Bitcoin fervently. In bad times, they buy it even more fervently.
Hey guys, welcome back to the show. I'm here with Joe today, which is head of growth for Theia. How are you doing, man?
Good, Maurizio. Thanks for having me on, man.
For those of whom they don't know you, do you mind to give us an intro and tell us a little bit about yourself?
For sure. Yeah. So I'm 23 years old. I'm a market analyst by trade. Now I'm working as the head of growth over at Theia, which is a Bitcoin self-custody solution. It's similar to Unchained or Casa. It's a self-custodial multi-sig application where you could go in, you could create multi-sig vaults seamlessly. No technical experience required. You could do it all from your iPhone or our web app, which we just launched. And that's basically what I do. And so my day-to-day workflow is basically looking at charts, looking at markets, talking about Bitcoin, making videos about it, doing all of our content. Basically, I am the Bitcoin marketing department. It's where we all work, right? So that's ultimately where I work too.
We're very lucky to have you. And how have you stumbled into Bitcoin? How have you discovered it?
It's actually interesting. I'll give you the shortened version. So in college, I was in business school, and they gave us Bloomberg terminals to play around with in the library. Every student got access to a Bloomberg terminal. We got our own login info. And so my day-to-day routine would be going to classes, going to Lyft, going to eat, and then going to the library to play with the Bloomberg terminal and figure out how to use it. Because obviously this is the best tool from a data perspective for global markets. And so I learned how to use it. I had known about Bitcoin during that time. And, I'm only 23. So this was around late 2019, early 2020 timeframe when I was just beginning to learn about Bitcoin. And then the pandemic hit, and that obviously threw a huge wrench into my plans. I was basically tossed out of school. They wouldn't let us come back. We had to take classes over Zoom. And so I started running a business in my hometown in my free time. I had a lot more free time. It was a lot more easy to not go to a single lecture because they didn't take attendance, and then just, do the homework, take the exams, get A's, whatever. And so I used that spare time to run this company. I ended up doing a really good amount of revenue, very high profit. And then at the end of the summer, I didn't know what to allocate into, right? I had been analyzing markets for some time at that point. And my friend Tyler LaRoche had sent me two different reading materials, The Masters and Slaves of Money by Robert Breedlove and The Bullish Case for Bitcoin by Vijay Boyapati. I read both of those. I was hooked. I put most of what I had earned that summer, basically all of it, into Bitcoin, which was great timing because that was around late 2020 before Bitcoin jumped all the way from, 7 or 8K to $64,000. And, I got into it for the number go up largely. But then when I saw what it had done, I became even more interested in what it was as an asset. And so I continued climbing down the rabbit hole, began, doing more research specific to Bitcoin. And I was sitting on all of this research, all of this knowledge. I didn't have anything to do with it. And so I decided to start publishing it all independently on Twitter. And then about 3-4 months of doing that, I was approached through a mutual friend by Nick Bhatia, who is the author of Layered Money. And at the time, he was starting a Substack publication called The Bitcoin Layer. He wanted a research associate to come and work with him and help him out on some data. And so we hit it off right away. I started working with him. And I worked with him for 2 years. In that time, I kept tweeting. I built my audience from, 0 followers all the way up to almost 50,000 followers today. Thank God. And, we built The Bitcoin Layer from a kind of somewhat fledgling hobbyist Substack publication that had like 2,000 readers to a Substack publication that's now close to 25,000 readers strong, a YouTube channel that also has 25,000 subscribers. And we've turned it, from this newsletter into a fully fledged, Bitcoin and global macro research firm. And so that's basically what how I got into Bitcoin, what I did there. Then as far as Theia goes, earlier this year, I was approached to begin writing some content for them, and my role grew and grew and grew. And this, as it generally does in a startup environment, you start doing one thing, and then it becomes 2 things, and it becomes 5 things, and your responsibility all of a sudden goes from this to this. And so that's basically how I got into Theia, and then my growth within the company. And we've been able to scale that company from 0 users to several hundred active users, several thousand Bitcoin under management. Over at Theia, we're doing extremely well as well. And so that's how I got into Bitcoin, and then how I got into both of the positions I'm in today.
We have a lot to talk about today. So in a few days, Trump is going to get in office, and I think things are going to about to go nuts. I mean, how do you feel about it? Because you are obviously based in the US, so I think the hype must be higher than me in the Middle East, right? Do you also have this feeling that something's gonna happen fairly quick?
I do, yeah. So, the first time Trump was elected, it was 2015. I was a freshman in high school. And at the time, I wasn't really into politics. I just found it really funny because I live in Massachusetts, which, for people that might not know, is an extremely liberal state, an extremely blue state. It has been for decades. And so when he got elected, I just found it really funny. Like, all the boys loved that Trump got elected because all the girls were freaking out, right? It was just some funny high school thing. Um, and then seeing what they did to him over the ensuing 4 years and the 4 years after, he was out of office, I've grown more hardened in my political beliefs. Obviously, those have been heavily impacted by COVID, right? I've had this really high skepticism toward higher authorities since what they did during COVID. They kicked me out of school, no recourse. I started going down the rabbit hole. And I became more jaded toward these higher authorities. And so when Trump ran again, right, obviously it was a no-brainer. And especially given what Joe Biden has done to this country over the last 4 years, again, it was a no-brainer to try to get Trump back into office. And so I'm extremely optimistic for a second Trump term. I voted for the guy. I live in Massachusetts, so it didn't make a huge difference. But one of the things that's particularly interesting before I get into the Bitcoin aspect of it, my town in Massachusetts, like my municipality, the area of my town that I live, it shifted almost 20 points in Trump's favor. So from the last election to this election, it was plus almost 20 points toward Trump. And that in and of itself, that right there tells you all you need to know about American sentiment towards Donald Trump getting into office. Everybody bought into the media narratives the first time around that this guy was crazy. He was a dictator. He was evil. He was racist. He was all these other things. Again, all those allegations proved to be false. They proved not even to be remotely true. But also, the more important thing is that he made it better. He made the country easier to navigate for everyday Americans. He made it so that we had a weight off of our shoulders. Prices were lower than they were now. Rates were lower than they were now. Generally speaking, people were earning higher real incomes, and their life was easier, right? They saw that Trump actually followed through on his promise until the final year when COVID hit of making America great again. People saw that. And then for the next 4 years, they saw everything that they enjoyed about the Trump administration completely destroyed, right? Prices through the stratosphere. Obviously, that has a lot to do with what the Fed did while Trump was still in office. But even still, most people think the president has to do with it. Wide open borders, right? This huge increase in violent crime. And so people who thought, all right, we'll vote for Joe Biden. He seems to be the more moderate guy. Even though, he poses as this nice grandpa, ultimately he is, this vessel for the administrative state that flooded our borders with violent criminals, made living much harder, and made college students in particular, made it so that it's much harder for them to find a job because now they're, competing with people who will be paid at half their wage, who are here being subsidized by the government with free housing and free food and free debit cards and things like that. And so it really radicalized a huge portion of Joe Biden's voting bloc from 2020 to 2024. So people are fed up. They've had enough. They're done. And so this, Trump administration coming in, especially considering that he was almost assassinated, he is very hardened and emboldened to put forward his agenda and do what he's going to do. Sealing up the border, mass deportations, 30 to 60 million mass deportations, tariffs with other countries, lowering taxes for everyday people, bringing prices down, which he doesn't have very much power over. Obviously, that's in the hands of the Federal Reserve. But needless to say, he is much more hardened and emboldened to get what he wants to get done this time around. He already did last time, but he ran into several roadblocks. Now he knows how Washington works. And that's one of the things he really wants to get done is this strategic Bitcoin reserve, right? And, he's spoken about this ad nauseum. And one of the very interesting things is in July, the moment at the Bitcoin conference that he announced a strategic Bitcoin reserve, his election odds moved 1-to-1 with Bitcoin's price, or I should say it the other way around. Bitcoin's price moved almost 1-to-1 with his election odds. So if you, overlay a chart of these two things, Bitcoin's price began becoming a reflection of Trump's likelihood of getting back into office. And so every single price movement we've seen since then has been a function of two things. It's been a function of global money supply, right? So where is Bitcoin going relative to the global money supply, and Trump's likelihood of getting into office, and now Trump's inauguration. And so in the lead up to Trump's election on November 5th, 2024, Bitcoin was, choppy, but largely trending downwards as Trump's odds were on Polymarket. In the final 4 weeks leading up to the election, Bitcoin moved from like 60,000 all the way up to 70,000. And during that same time, Trump's odds rose from like 41% all the way up to 55, then 56, then 57, then 58. And then on election day, as those odds spiked all the way up to 100, Bitcoin broke out of its range that it was really struggling with. And in the following days, it moved from $67,000 all the way up to $90,000. We totally skipped the $80,000 range. We spent in total, I think, 5 days in the $80,000 range. So Trump's election basically was a huge boon for Bitcoin's price. Obviously, on the promise that these things will come to pass, a strategic Bitcoin reserve, making the United States the best country globally for Bitcoin adoption, for Bitcoin capital allocators, businesses, and the like. And so now that his inauguration is here, what we're seeing is basically the exact same trade, that exact same choppiness, that sort of uncertainty, those pre-inauguration jitters. And then once this event passes and the wheels are finally in motion for these things to happen as it pertains to Bitcoin, the strategic Bitcoin reserve and the like, Bitcoin's going to rally and rally hard. I tweeted this out early January. I said this feels what we're experiencing now a lot like what Bitcoin was doing before the election. And now we're finally seeing that come to pass. Or rather, I should say, the likelihood of a strategic Bitcoin reserve, that's now the market that's moving closely in tandem with Bitcoin's price. You could take Bitcoin's price as a proxy for the likelihood of a strategic Bitcoin reserve. This market is also available in itself on Polymarket. It's will Trump create a strategic Bitcoin reserve within the first 100 days? It's moving almost neck and neck with Bitcoin's price. So basically, the Bitcoin trade in the lead up to November 5th was, will Trump get elected? The Bitcoin trade now is, will there be a strategic Bitcoin reserve? And given Trump's adamance about getting everything done that he has promised, because he's emboldened. He's going back to Washington on a revenge mission this time. And the fact that he's clearly serious from the get-go of doing this, he's assembled a task force to get these things done. And he can do it in several different ways by executive order. He doesn't need the Congress to do this. And so given all of that, that's now the Bitcoin trade. And so Bitcoin, on Monday, chances are that's finally when we're going to be breaking out of this, $90,000 to $105,000 range. And we're going to see much, much higher levels after that.
How are you expecting the next phase to be? Because some people are saying, well, for the first time in this cycle, Bitcoin has gone above the all-time high prior to the halving, never happened before. So maybe the cycle is shorter. Other people are saying, no, we're going to go into 2027, 2026 because of the strategic reserve and all the people that Trump is appointing around him is crazy. Everyone is crypto/Bitcoin. Bitcoin is not crypto in my universe, but whatever. Some of the people that he appointed, they're in favor of both, right? So are you expecting like a longer cycle coming in, or do you think towards the end of the year, when technically, statistically, we should have a correction, we will stop?
Every asset, regardless of how popular it is, even individual stocks, they experience cycles. That said, so I don't expect Bitcoin to break this kind of cyclicality it's been in. It's never necessarily 4 years. There are factors that make it shorter than 4 years, so just COVID. And there are factors that can make it longer than 4 years, so just probably what we're experiencing now. But the 4-year mark is just something that's largely happenstance. It's largely coincidental, right? It has very little to do with the halving event itself, at least now, because the supply coming into the system on a day-to-day basis has very little impact on Bitcoin's price. Most of the Bitcoin that's being traded is just the Bitcoin that's already out in the open, right? We're talking an asset that does hundreds of millions of dollars in volume every single day. So the supply schedule matters very little. The terminal supply of 21 million matters a lot because it makes Bitcoin an absolutely scarce asset. But this idea that the halving brings about these 4-year cycles is, in my opinion, largely untrue as a result of where we are. It used to be that it had a huge impact. It had an outsized impact. Now, not so much, right? And so that said, Bitcoin can have this extended period. It can appreciate, it can rise in this bullish phase for more than 4 years, right? So 2025 into 2026. This is supposed to be, historically, given Bitcoin's 4-year cycles, the last year it rises to an extreme degree. But in the long term, what I will say is that Bitcoin is going to be the least correlated asset in global markets. Think about it this way. Today, Bitcoin trades like a tech stock, but its monetary properties that are outlined in the white paper that happens to be colored black behind me make it so that Bitcoin is the apex hedge against monetary debasement. In good times and bad, that's the thing you want to be buying. But currently, the way Bitcoin trades, in bad times, people sell Bitcoin. Over time, that's not going to be the case anymore, right? In good times, people buy Bitcoin fervently. In bad times, they buy it even more fervently, right? Because, Maurizio, what happens after every single recession? We get money printing, right? And so people will want to allocate to Bitcoin when there's blood in the water. They'll want to allocate to Bitcoin when everybody's fearful. And so ultimately, Bitcoin won't trade in either this risk on or risk off bucket. It will be the least correlated asset of all time because people will be buying it regardless of the macroeconomic backdrop. That said, we're not quite there yet, right? Bitcoin still trades to a very high sensitivity to the overall market. It does trade like a tech stock, but that's going to change, and it's going to change very soon. And potentially it's been changing, but a huge catalyst for this change will happen on Monday when the president, who has vowed to establish a strategic Bitcoin reserve, does so, right? Or the likelihood of him doing so rises because now he's in office. And so the reason ultimately Bitcoin will shift, and it has shifted away from being this highly sensitive tech stock into this global this risk off / risk on asset. It's not going to be correlated. You're not going to have a label for what this kind of asset is, how it performs. The big reason for this shift come Monday is now the world's leading economic superpower is going to be very, very close to actively accumulating Bitcoin. And what that is going to do, and what it's already set in motion, is this global arms race of other countries trying to do the same, both our friends and our adversaries. You have rumors out of Russia, the Russian finance minister himself, and Vladimir Putin both saying that Bitcoin is something that's very interesting. It's a currency that the Russians could use to move around dollar sanctions that they've experienced during their war in Ukraine, which they're obviously very unhappy about. And so it's attractive to them for that purpose. But the other purpose is that they're trying to establish BRICS. I lend very little credence to that. But regardless, what they're trying to do with BRICS is create this basket of currencies that's backed by a commodity in order to use for trade amongst themselves. That's not the US dollar. Currently, the US dollar is used for basically all of global trade. It makes up 50 to 60% of global foreign exchange reserves, meaning the money people hold in order to participate in international trade is dollar denominated. They're trying to move away from that. They wanted to do it with gold. They wanted to create this commodity-backed basket of currencies with gold, but that doesn't work because gold is not portable. It's not easily divisible. You can't settle multi-billion-dollar international trade agreements in this big rock, right? It's extremely difficult to do that, especially with today's economy. Payments are such a high frequency, right? High frequency settlement of gold, that doesn't really work. And so Bitcoin works for all of the reasons that gold does not work for this specific purpose. And so now, this group of nations, right? Some of the strongest non-US nations out there, China and Russia, among others, are now considering Bitcoin, right, to back that basket. And so for all these different reasons, Trump, talking about a strategic Bitcoin reserve only accelerates this, right? It set the wheels in motion in July when he spoke about it at the Bitcoin conference. And now nation states, right? Not just nation states, but we're talking the G20 of the world, the G7 nations of the world, some of the strongest countries in the entire world are now considering and will probably likely soon begin actively accumulating to Bitcoin. And for that reason, right, Bitcoin is going to be more uncorrelated than it ever has been before, because the name of the game for these people will be buy as much Bitcoin as I can before my adversaries do. And they have an infinite money printer in order to do it. And that idea makes me not even want to put a price target on Bitcoin, right? Genuinely speaking, the sky is the limit for Bitcoin's price. Should this happen, should this race occur to an extreme degree, and it's going to get underway starting Monday.
And you mentioned gold, and I have to ask, I mean, gold is hovering more or less around 18 trillion as we speak, and Bitcoin, depending on the price, more or less, we are actually pumping into the 100,000, which is nice. We might be around 2 trillion. Are you expecting us to get to half of gold market cap for this cycle? Do you have a target in mind?
Right now, we're already, closing in. We're more than 10% of gold's market cap. I think that over the next decade, probably a little bit longer than a decade, but we'll have to wait and see because, this is completely uncharted territory. These people have infinite money printers, infinite balance sheets they could use to accumulate Bitcoin. And so, I wouldn't put a time target on that necessarily. I think within the next decade is a very easy bet, but Bitcoin will demonetize gold because it does everything that gold does, but better, right? It's more divisible, it's more portable, and more importantly, above all else, it's more scarce, right? It's more neutral. people, the value proposition of gold is that it is scarce, right? It's a hard money. You mine it out of the ground. You talk to somebody in West Texas, you talk to a boomer in West Texas, they'll tell you that, they hold gold instead of US dollars, right? And they do it because it's scarce. But the reality is when gold's price rises, the issuance of gold rises too. When gold's price rises, it gives more money to the people who are selling gold, i.e. the miners, and they have more money to go out and explore new places to mine gold. And this is the same for any commodity, right? When oil prices are up, to a large extent, it gives these oil prospectors more money to go out and look for new wells. In the same way, it gives these gold miners the more capital to go out and begin expanding their existing operations, getting new equipment, getting more equipment, bringing up more gold out of the ground. When gold's price rises, more gold comes out of the ground because it's more profitable, which drives the price back down to equilibrium, right? So ultimately, with every single asset on earth, even something as so as scarce as gold has a demand response function, wherein as the demand rises, the price rises too, the supply rises to meet it, the price falls back to equilibrium. Now, of course, because of monetary debasement, gold's price is going to continue rising into infinity. I have no reason to believe that gold won't continue serving the function that it always has. But over time, and this is the trend we've seen, Bitcoin is going to usurp more of that share, right? Gold is currently the preeminent, not just asset in the world, but also monetary debasement hedge in the world. Bitcoin will usurp that throne over the next decade. And over time, Bitcoin will overtake gold, not just to become the apex monetary debasement hedge, which its properties allow it to be, unlike gold, but also is the world's largest asset, right? So whether that happens at 20 trillion or by the time gold hits 30 trillion, that's when Bitcoin surpasses it. It's just an inevitability, right? In the same way that Bitcoin is inevitable, the fulfillment of its value proposition will be realized when it overtakes gold as the world's largest asset. And that's just something that is inevitable, right? And so if you know that, that's a pretty big arbitrage, right? Knowing that Bitcoin is going to be a $1 million to $2 million asset by the time it becomes the largest asset in the world. That's a pretty big arbitrage because Bitcoin's trading at, what's it trading at right now? $104,700. So pretty huge arbitrage, right? So for anybody listening, right, understand that this is where Bitcoin is headed and understand that you have the ability to capitalize on that informational arbitrage, that cognitive dissonance between what Bitcoin is and how the market trades it. It's currently trading money printing insurance at a 90% discount to what it should be trading at. You got to understand that.
I mean, I'm sure you've been all over the ETF volume, which was complete bananas. I had Matt Hogan on the podcast. We discussed in details. ETFs have smashed all the records. They got billions of dollars in literally like 200 days compared to the second best at this point, which was 3.5 years. And this shows that there is interest, there is demand. And I wanted to ask you also, because I feel like even though Matt is kind of confirming that the ETF, most of the volume is retail, I don't know if you agree with me, but I don't feel like anyone cares about Bitcoin being over 100,000. I mean, maybe it's just me being in a bubble with you guys and talking to you guys about Bitcoin, but it feels like nobody cares. I don't know if you agree with me here.
Yeah, no, it doesn't feel like anybody cares, right? Obviously, my circles are a little bit different. I have young friends. You probably have young friends as well. When I go to the gym, my friends from high school, my friends from college, my friends from my town ask me about Bitcoin. They say, I just bought more. But the reality is, if you go into any American grocery store, any poll, you do an exit poll for the day, everybody leaving the grocery store has to take this exit poll, and they're asked, have you heard about Bitcoin? Chances are probably 70% will say yes, probably 70, 75. Do you own any Bitcoin? Probably only 5 to 10% will say yes, right? And if you move further out into rural America, chances are that drops even lower. And so the reality is, even though most of these inflows are coming from retail clients, these Bitcoin ETFs are still nowhere close to the size of the world's largest ETFs, right? Those being SPY, those QQQ, the S&P 500, NASDAQ ETFs, Russell ETFs, and the like. And so even though these spot Bitcoin ETFs, IBIT in particular, were the most successful ETF launches of all time, IBIT was the fastest to hit something like $50 billion. It hit it in like 41 or 42 days compared to 155 for the runner-up. Also, it had the best 1 year launch of all time. If you compare it to gold, it just completely blows it out of the water. If you compare IBIT alone, it completely blows all gold ETFs out of the water in year one. So even though these assets are these ETFs are setting records, which is indicative of a huge consumer appetite, or retail appetite rather, for Bitcoin, most people still don't own it, right? And so if you come to that realization, you realize, oh my goodness, we have so much higher to go. Even though these vehicles are already online, people still don't know or understand at an intimate level what Bitcoin is. And even more people don't even own it. And so I completely agree with you, right? Exactly as Matt said, basically all of these inflows, the lion's share of these inflows into these ETFs came from retail. But the reality is that we haven't tapped even close to 5% of, the total addressable market from the retail side that these ETFs can hit. And once you realize that, right, you realize that, we're not even, Bitcoin hasn't even remotely saturated all of the market that it will saturate, let alone institutions, let alone these banks that now, if Trump repeals SAB 121, they can custody Bitcoin, and not to mention these nations that are going to begin actively accumulating Bitcoin too. So again, it plays into what I said there. Like literally, I do not have a price target, right? Because everything is moving in Bitcoin's favor at this point. It's so unbelievably bullish from a macro perspective as well, the situation we're currently in over the next several decades. When I say Bitcoin is inevitable, like I mean it, and I mean it with everything in me. And so, for anybody who doesn't have a position, I do feel very sorry for them.
Do you play the market? Like if you do know that there is a cycle, which is 4 years, more or less, maybe 3, maybe 5, but there are moments in which the price moves drastically ups and down, and you are an analyst, so you actually have your head into it. Do you have a percentage of your portfolio that strategically you sell and or buy to try to maximize your portfolio, if it makes sense?
I'll put it this way, and then I'll explain why. I never sell. I only increase the amount I'm allocating during certain periods. So, for example, for this entire summer, I raised my dollar cost average, basically by double. I 2x my dollar cost average, but I never sold anything. And that's something that's extremely important for people to understand because, even for me, someone who's staring at charts all day, who's looking at this market, if I were to sell a sizable portion of my Bitcoin holdings to buy in lower, like you said, I'm missing the point of Bitcoin, but also I'm incurring a massive capital gains tax on everything, right? If I'm holding this for longer than a year, the Bitcoin that I'm holding for longer than a year, and it's really difficult to, do tax law for this, and I sell any of it, it's taxable at 15%. And so I'm negating all of the gain I would have made by selling and then buying back lower, basically all of it, if I don't time it correctly. And you factor in that 15% taxable event in the United States, not to mention state capital gains tax, right? That's just the nationwide capital gains tax, 15% long-term capital gains tax. So for me, rather than timing the market to sell, I just time the market to increase my buying. And obviously not financial advice to anybody listening, but ultimately you should, or I won't say you should, because that I guess constitutes financial advice. You never sell your Bitcoin, right? You just don't do it. You simply choose times in which to basically think of the amount you're, buying Bitcoin as like a sliding bar. You buy Bitcoin at regular intervals, which is what everybody should do because nobody can time the market properly. Let's say you're putting in $100 a week, $100 a week, not a huge amount of money for most people, $400 a month. $50 a week would be something that's a little bit more manageable. I'll use $50 a week as an example for, let's just take the median American. $50 a week, let's say, it's just a standard, Bitcoin bull market, right? You hold on to that $50 a week as long as you can, right? Until you believe we're getting a little overheated, whatever indicators you use, right? Sentiment, whatever. You believe we're approaching a top, at which point, right, you begin scaling back your DCA, right? You don't want to buy all this expensive Bitcoin. You scale it back. Let's say we move that sliding bar a little bit. The camera's reversed, so a little bit to the left, right? We slide it down to maybe $30 a week. Bitcoin begins falling, right? Then you increase your DCA back up to 50 and maybe even 60 or 75 or even 100, right? And you basically do that, as cycles move higher, as Bitcoin's price moves higher, if you'd like to, what you can do is you can claw back that DCA. You could bring it down slightly. And then as cycles get overheated, the price begins moving in the reverse direction. You could begin scaling back up again. And that's one really easy way to outperform just doing the standard DCA. But ultimately, the dollar cost average outperforms even lump sum buying over a 2-year period, over a 3-year period especially. You're not going to outperform the dollar cost average just buying a certain amount of Bitcoin at a set time. By lump summing, you get a bonus at the end of the year, you throw it all into Bitcoin. You're not going to outperform if you just gradually allocate that bonus over a period of months and years. So that would be that, that's generally the strategy. I've been DCAing into Bitcoin since 2020. I haven't stopped. I have sold. I have learned this lesson. That's why I'm preaching this lesson. I have sold, and I sold a decent amount at the wrong time, and I'm still kicking myself for it. And so generally the lesson is buy what you can. Don't buy more than you can. Don't eat into your expenses to buy Bitcoin on the hopes that it'll go to $1 million tomorrow and your $100 DCA will be worth, $1,000. That's not why you buy Bitcoin. You buy it as a long-term savings vehicle. So in the same way you contribute to your 401k, contribute a little bit to Bitcoin at set intervals with the promise, with the understanding that you're not going to sell any of it. You'll just adjust the amount you're contributing to your Bitcoin vault, if you will.
There is always one question that pops in my mind, which is, why am I selling if you don't need in the short term any money? It makes sense because for me, Bitcoin is money. I think as soon as we will see companies allowing us to borrow against it, which is going to be, I think, I wanted to ask you also, because actually today, I think it was yesterday, Coinbase announced you can now borrow up to 100,000 instantly, right?
Yeah.
And I'm like, okay, but am I losing custody of my Bitcoin? Who's going to have my Bitcoin? What's going on over there? I mean, Coinbase is kind of quote legit. They have custody for most of the ETFs, but I mean, I don't know. Do you also believe that we are going to see products where they're going to allow us to borrow against it? And at that point, well, then it becomes like real estate. I don't have to sell my house. I can just borrow against it.
I think so. Yeah. So I'll touch on the Coinbase thing. Well, I'll touch on the first thing you mentioned first, just as a kind of an aside to my last answer. Human greed is never going away, and Bitcoin's 4-year compound annual growth rates over the last 4 years, on average, how high it goes in percentage terms every year, is like 40% right now. It's like 40 or 50%. So if 50% appreciation of your wealth a year isn't good enough for you, just go to the casino. Just go to the casino, play slots all day, put it all on black. Like that's what you should be doing. You're an unserious person. But ultimately, human greed comes for us all. You need to understand that what you're buying is insurance over the greatest meltdown of an economic system, a global economic system, over the next 100 years that the world has ever seen. Bigger than the fall of Rome, bigger than everything. And so once you understand what you're buying, you do not want to sell it under any circumstances. And so, any coins that promise, look at this price action, right? I'm going to go buy Hawk Tuah coin, right? I'm going to go buy Chill Guy token, whatever. It's all garbage. It's all worthless. It's just as reliable as going to the casino and playing slots. That said, you don't want to sell, right? And so borrowing dollars against your Bitcoin becomes something that a lot of people are demanding. Doing it at one of these crypto firms is extremely risky. We saw what happened at FTX, right? With basically all of their yield products, all of their lending products, and even customers who were just custodying with them. They were having their Bitcoin stolen on the back end, used as collateral in high yield loans. Those loans didn't come in. You couldn't call the collateral in. It was gone. Then all of a sudden, as soon as these people were knocking on the door for their Bitcoin, it was gone. So I would be very wary of any crypto or Bitcoin native exchange that offers a lending service that isn't over collateralized and explicitly stated. That said, Bitcoin is about to break into the US banking system. Trump has talked about repealing SAB 121, which will make it possible for banks to custody Bitcoin should they choose to. And that means just like you can go into your bank and get a certificate of deposit, some places you can go and get a money market fund. Some banks over the next 4 years, you'll be able to go into and purchase Bitcoin. They'll be custodied at the bank in the same way that you go and get a CD or something like that. That's a game changer because then that also means that just like banks use the dollars they have from you in your checking and savings account in order to write loans, they will be able to take the Bitcoin that you're buying with them, and you will have an option to put it into a high yield savings account, which will then be used as collateral in order to write loans, write fiat loans, and you'll be able to earn dollars with it. And so all these cool that's just one financial instrument, all these cool financial instruments like high yield savings account, Bitcoin backed loans, they will be possible over the next 4 years and beyond should Trump be able to repeal SAB 121. Congress actually voted to repeal it, and then Joe Biden vetoed it once it reached his desk. So for the viewers at home, the way that U.S. lawmaking works, a law has to be made in Congress and pass Congress before it goes to the president's desk and gets voted on. The president has the final say, and Joe Biden chose to veto it. And so we have a pro Bitcoin Congress, and now we have a more pro Bitcoin Congress than we ever have before. In 2020, we totally swept. We gained more seats, both on the Republican side, which is more pro Bitcoin, and the Democrat side too. It's already passed the Congress once. It'll pass it again, and you can bet that once it reaches Trump's desk, he will sign it into law. That means all these unique financial instruments on top of Bitcoin will be possible in the United States in the traditional financial system very soon, right? If this all materializes, if this comes to pass, that will greatly increase Bitcoin adoption. That will greatly increase the number of financial instruments running atop Bitcoin. And that will more firmly cement Bitcoin's place as the world's best collateral. So currently, the most popular collateral around the world is U.S. Treasuries, right? People, banks borrow and lend, institute global, trade. It occurs with U.S. Treasuries being used as collateral. They're not a very good collateral type for a couple of reasons. Chief among them is interest rate risk, right? As rates rise and fall, the price of these U.S. Treasuries fluctuates greatly to some degree. And so people that bought, for example, the 10-year when it was yielding less than 1% 5 years ago, they were completely destroyed when all of a sudden rates went to 5.5%. As a result of that, we had the Silicon Valley Bank crisis, right? Wherein there was this huge amount of balance sheet impairment due to interest rate risk, right? Huge hole left in the balance sheet because as rates come up, the yield on existing bonds has to rise. And the only way to do that is by driving down the price. And that's basically what happened. That's bond math. And so they're not a very good form of collateral for that reason. The other reason is that you can't call them in 24/7, 365. They're a huge global liquid market, but you can't call the collateral in 24/7, 365. You can't send a notification to the person who posts the collateral for the loan, or for the person who has the loan and say, hey, the price fell, you need to re-up. You can't do that instantaneously and then have them re-up instantly. There's no way to do that. But with Bitcoin lending, right, it serves as a better collateral for that reason. It is 24/7, 365. You have the ability to call it in at any time. It's highly liquid too. It's the seventh largest asset in the world. And so for that reason, lenders are like frothing at the mouth with the prospect of being able to use Bitcoin as collateral because it means they'll be able to do their business better. It will also increase the quality of lending, right? Because people will not want to post their Bitcoin as collateral unless it is, something that's an extremely surefire thing. You won't want to give your Bitcoin to the bank unless you know that they're going to be using the proceeds from that to invest it in a really surefire thing. And so Bitcoin underlying all this financial instrumentation is going to make global borrowing and lending a whole lot better. The risk of default when you put your Bitcoin up, when you offer it to somebody as a loan, will be a whole lot lower. And so it'll make for a better world. It'll make for a better, more functional global credit system that works for all. So I went on a bit of a tangent there, but yes, I do expect these instruments to come to the fore, at least in the United States, over the next couple of years. And I do believe that it will have a seismic impact on the way that people choose to use their money.
I'll definitely see you in Vegas. And it's been great. Thank you, Joe. It's been an absolute pleasure having you on the channel. You are an absolute gentleman.
Thank you very much, Maurizio. Great to talk to you.
And yeah, guys, thank you so much for watching. We'll see you on the next one.